So let's talk a little bit about the collateral file, the loan file, the origination file, called many different things. The collateral file is essentially the note, the mortgage, any assignments or allonges, along with the title policy. This is what you're buying when you're buying a loan. You are investing in those documents. They are extremely important to have. We can kind of go into a little bit of what they are within there, the difference between an allonge, an assignment, a mortgage, and a note. But let's also look at some of the other contents of the file. You will have what's called the loan file or the origination file. This is what happens prior to the loan being generated. This is gonna contain your loan application, your credit report, all the disclosures to keep you in compliance with the government or Dodd-Frank. You'll also find in the loan file, you'll find the appraisal, any sort of inspection, stuff along those lines. So this all happens prior to the loan being executed, and that would be called the origination file or the loan file. The collateral file is the mortgage, the note, assignments and allonges, and the title policy. Maybe if there's a loan modification or a forbearance agreement, that will also be in the collateral file. So the biggest difference between the mortgage and the note is the note is the IOU, and the mortgage is what collateralizes the property against the loan in the event that the borrower doesn't pay you, which happens from time to time. So within the note, you're gonna find stuff like the interest rate, the payment amount, what is the penalty for late payment, and you'll find information like what happens if they stop paying. Basically in the note, you find all those things. The maturity date also is on there. And you wanna make sure that you actually have the original note when you're buying a loan. Sometimes they get destroyed and you'll find a lost note affidavit in there. This is acceptable as long as there's a copy of the note, but for the most part, you wanna try to make sure that you have the actual wet ink promissory note whenever you buy the collateral, because it's what it shows that you own the loan. It's like if a check were endorsed to blank, who would be entitled to the money on that check? Well, whoever has possession of the check. So, which kind of brings us to how do you transfer notes? Notes are transferred with either endorsement stamps. So you'll see a stamp usually on the signature page when somebody is selling the note that'll say paid to the order of, and then they'll either write the name of the person they're selling it to, or they'll create an entire stamp if they're selling them a bunch of loans so they can just rubber stamp it. And then it's signed by the person selling it. Or they will use something called an allonge, in which case they will sell the asset and they will attach a piece of paper to the note, which is an allonge, which essentially has all the details of the loan, and then it says paid to the order of. Very similar to a rubber stamp, it's just on a separate piece of paper. Now the mortgage is what's gonna collateralize the loan, and that's what's basically saying, here are the rules on how you get your money back or how you can foreclose on a property. That's found within the mortgage. It's going to pledge the property as collateral for the loan, in which case if you have to get the property back, it'll tell you how you have to go about doing it. There'll be some other important clauses in there, like an assignment of rents clause. Maybe you've got a borrower who's collecting it or using it as a rental property. They're collecting rents, but they're not paying their mortgage. Sometimes you'll find a clause in there, the assignment of rents, which would allow you to take that mortgage to the courts in the foreclosure process, and you can have rents signed to you as the lien holder. Pretty cool stuff in there. So let's look at how do you transfer the mortgage. I just gave you the answer. You're gonna transfer it by utilizing an assignment of mortgage. The assignment of mortgage basically is something that identifies all the details of the loan, when it was signed, who is the primary lender on the deal, identify the borrowers, it'll identify the actual mortgage where it was recorded in public record, a book, a page, an instrument number, and it will assign that mortgage to the new lien holder. For every time you sell a loan, there should be a corresponding assignment of mortgage and a corresponding transfer of the note via the stamp or the allonge. You want to make sure that that happens to maintain the chain of title. If you ever go into foreclosure, the first thing usually that an attorney for the borrower is going to challenge is your standing. And they want to see if you actually have the completed chain of title and can show all the corresponding assignments and allonges throughout the transfer of title. And then the last thing will be the title insurance, the lender's policy. You want to make sure that there's a lender's policy in there. Usually it will flow with the chain of assignments from borrower or from buyer to buyer, buyer to seller, buyer to seller. So you want to check to make sure there's a lender's policy in there. If not, you can always buy a lender's policy, an updated one, which will start from that point moving backwards. That's how title policies work. They don't insure title from a point moving forward. They're basically going to say from this point backwards, I'm ensuring that the title is clean. What happens in the future, I'm not insuring against. So if you ever need to get a title policy, just always kind of keep that in mind. So that's a collateral file and a loan file, origination file. Those are all things that you're going to see when you're buying and selling loans. You want to make sure to go through in your due diligence and make sure all those pieces of the puzzle are there. If not, always reach out and ask them from the seller. Hope this helps.